Hi everyone, it's Sean from STK Markets. What we're doing at the moment is just doing a catch up with the majority of the stocks we're in. As we know, the markets have been very weak and it's been across the board, not just really stock specific. What we have seen though is gold start to appreciate quite nicely, almost hitting all-time highs. But what we thought we'd do before we go into all our companies, we'd sit down with John Forward from the Well Funds Management. He's a fund manager which you've seen previously. He's performed year after year after year, or outperformed year after year after year in the markets. And obviously, he's an expert geologist, lawyer. He's got a very extensive background, very well schooled and scholared. And I thought we'd sit down and just get an update from John as to how things are going and how he sees the markets and how he's positioning his fund moving into the current times that we're in at the moment. So, hi, John, and welcome. Good to see you.
Sean, great to see you. Looking forward to having a quick chat.
Yeah, well, it's been a very interesting time, and clearly we both participated in Southern Cross last year. That was a number 3 IPO, which was great for your fund and my investors, but in terms of performance. But the gold has been going up, and I know your portfolio is positioned very heavily in gold, which is obviously hopefully going to work out very well for you and the investors that we've got in there. But can you just give us an update of where you think the critical metal space is and the gold market's going and just how you're feeling with the portfolio's particular moment in time?
Yeah, Sean. Look, the market has been very volatile, up and down. Even, we're into March here in 2023, and we've already seen a tale of two halves, if you like. January was very strong. The gold price had a really good run in January, and so did junior equities in the resources sector. When people were thinking that, okay, the US Fed will have to taper rate hikes, and we might have seen the last of those hikes. And then moving into February, we went backwards. There was a renewed expectation of further rate hikes as further inflation data came in. But just in the last few days, we've seen the outbreak and contagion of the Silicon Valley banking crisis, and that old Swiss banking name Credit Suisse looks like it'll be no longer as that banking crisis starts to move across the world. And I think there is now an expectation that as a result, the Fed, it's doing what they call not QE, but it's basically injecting liquidity into the banking sector, and that's as a result of this, we may see the end of rate hikes in the US, and that will be both good for gold and good for the more junior end of the resources sector. So I think right now it's looking quite positive again. We've seen central banks come out and be buying a lot of gold over the last 12 months. I think 2022 was almost a record year of buying by central banks, and we're also seeing other or investors look towards alternative asset classes that aren't US dollars. The de-dollarization theme, I think, is gathering even more pace, and that's good for things like Bitcoin, but it's also very good for the gold price.
We've sort of seen that over the last couple of days, like the Credit Suisse UBS trade that was talked about over the weekend. That gold price went nuts, and hopefully we have seen the end of these interest rate hikes, and generally it takes a very bad thing to get the markets going well again, which is quite strange. It's weird how it all works. But have you got any favourite commodities which, if we all start moving forward again, where you've positioned the world, where you could really see things moving forward in a nice way?
Yeah, look, gold is an obvious one. I think we've seen some tough times for the gold sector. The gold producers have been hit by inflationary pressures on their operating costs. But with the jump in the Aussie dollar gold price to nearly 3,000 Aussie dollars an ounce just in the last week or so, we should see a nice margin opening up there, and we're also starting to see M&A activity gathering pace. Just this week we're seeing Ramelius take over a junior called Breaker in the Western Australian goldfields, and we're seeing more and more of those business combinations happen. So I think we're positive on gold. Look, we're positive on copper. All the world is positive on copper. The copper price is trading around $4 US a pound. I saw some data today that said that the top 50 new copper developments globally need an average of US $5.50 a pound to incentivize their development. So that's probably a base level, given the requirement, the demand for copper that we're seeing both from China reopening and in the medium and long term, the demand from electrification. You don't decarbonize without electricity, and you don't have electricity without copper. So the forecast demand for copper is very, very substantial. I think there's a 1 million ton per annum deficit in copper metal forecast for 2030 by some very well respected analysts. So yeah, we like copper.
Yes, we've certainly seen that, this decarbonisation going from combustion to electric. There's a few other commodities too. We were looking at nickel earlier today. Have you guys got a view on nickel at the moment?
Yeah, look, nickel's a similar thematic in terms of decarbonisation, similar to copper. And nickel ain't nickel. If you like, there's a lot of nickel production out of Indonesia. That's the major producer, but a lot of that is lateritic nickel, which is very high carbon intensity to go through and produce battery grade nickel or metal, metal grade nickel. So nickel sulfides are very highly sought after. The nickel market, it's been since March last year, when Mr. Big in nickel, Changshan, the Chinese group, was caught short. That big short happened in March last year. But more recently, we've been finding some scandals breaking out in the nickel market. The London Metal Exchange announced that some of the nickel in one of its licensed warehouses was actually not nickel. They were just bags full of rocks. Stones off someone's front drive or something. And before that, there was a delivery. It was $500 million charge for fake nickel being delivered. So just that indicates that people are very short of nickel.
Okay, so it's obviously that critical metal space that we're looking at. The last one I'll ask about would be tungsten, and then we'll go into some stocks that you're really liking at the moment in your portfolio. What do you think of the tungsten market at the moment with the geopolitical theme that's out there with China and Russia? Do you think tungsten is somewhere to be at the moment too?
Yeah, look, tungsten, it's got a lot of industrial uses, but as we know, it also has a lot of military uses as well. So with the increase in spending on defence by small countries like Australia, and the pressure on Europe to increase its GDP spending, NATO countries have been underspending their 2% commitment quite significantly. And I think that's been highlighted by the war in the Ukraine. There's demand for tungsten, and particularly tungsten from non-Chinese supply, I think will be well supported. And we are seeing some we're seeing the Dolphin project in Tasmania. We're seeing Carbine starting to increase its production again. So I think tungsten is a very interesting niche market.
Okay, perfect. So we've also got the WIL, as you've known, has performed very, very well over the years. Are there any opportunities where you're looking at share specific at the moment, or would you rather keep your secret intel to yourself?
We've recently made a reasonably significant investment in a new ASX IPO called Lewin Metals. We expect to see that come on late March, maybe early April. That's got some exciting battery metals projects in Canada, nickel and lithium. So that's one we're watching. As you know, we're shareholders in Southern Cross Gold, and yeah, that's a particularly interesting play, which is very close to home here in Melbourne, just an hour or two up the road, and yeah, continuing fantastic hits there. The number of 100-gram meter equivalent gold equivalent hits that they've got is remarkable. So I think continued drilling there that Mike Hudson has got planned should continue to reward the persistence.
That's excellent, John. Well, listen, mate, thank you very much for your time today. It has been a crazy time in the markets, and hopefully, as you've said, these interest rates rise, which have been causing a lot of the pain due to inflation, have sort of hit the peak for the time being, and hopefully we actually see some reductions. But thank you very much, John. It was very enlightening.
Oh, that's a pleasure, Sean. Yeah, always good to chat and get the updates on the market.